It's Wednesday, November 5th. Let's level up. Markets had a rebound today after hitting a very key technical level on the downside in the overnight session. First and foremost, though, we did see a little bit of a drop. We're into the 62% probability of a Fed rate cut. It's still more likely than not. Sentiment is pretty bearish. The CNN gauge is 24%. VIX, however, is not confirming a lot of this. The bulls do need to get it back below 1724, but the bears have yet been able to get it to stay over the 200 MA at 1936, so we need to see one of those break definitively. As far as the ES and the NQ go, we did see the liquidation break down to the 2 times range from our consolidation up top. We got the 50% fib and the 2 times range at 67.47 to 67.48 quarter, and we bounced back to the neckline, which was the point of the breakdown at 68.51. We actually exceeded a little bit and then pulled back. So far, the bulls have been able to hold where they need to at the 50 MA 30 minute, currently as of this video, 68.15.75. But they do need to clear the 200 MA 30 minute at 68.49.75, and I would just say 68.51 because that's the neckline. We are forming a little bit of an inverted head and shoulders here, so I wouldn't fight it if we do break on the upside. We were supposed to stall there and back off. The big key now is if the back off's going to be shallow or steep. If it's steep, obviously not so good. If it's shallow, that is better for the bulls. Qs, similar situation. They hit the 2 times range at 25,304. 50% number was 25,278.75, and then they bounced it. We got back to the neckline at 25,853. Basically, we need to clear 25,853 to 25,880, which was the high of day. If we can clear that, I think we do rally. Anything below there is chop with liquidation break potential. Same goes for the ES. As far as SPY goes, we held where we needed to at the 1010 reference high at 673.95. It wouldn't surprise me to see a little bit of an overshoot if we do resume to the downside and get the 1023 gap fill at 671.76. And I think if we were going to have an end range type of move, meaning if there was more downside, 667.34 and wherever the 50 MA is at 664.24 and rising. On the upside, obviously the 11.3 gap fill at 683.34, and then we would be back into range. We are still currently a little bit below there. We are holding on the channel low, so it's really a very key situation here with whether we can hold the 20 MA for the bulls and clear the 10 MA, or for the bears, reject the 10 MA and then break below the 20 MA. As of this video, 10 MA is currently 680.68, 20 MA is currently 672.84. As far as the Qs go, we have 2 days of roughly the same range. I think if we get below today's low of day at 617.21, we'll come down to fill the 1023 gap to 610.58, maybe even a run to the 61.8 of the range at 607.37. If there is an overshoot to the downside, obviously it would be channel low in the 50 MA confluence, currently 599.92, so roughly that 600 level. On the upside, we'd be targeting the 11.3 gap fill at 632.08, and then we'd see Apple firming up, holding the 10 MA, which is good at 268.07. Anything over 270, I think, remains bullish. If there is a liquidation break, we could retest the 260.10 breakout, which is also the 20 MA, and the channel low lines up kind of close to the gap fill, the 1017 low at 252.29, which will line up with the 50 MA by the time we get there. Basically, if we lose 10 MA, we get 20 MA. If we lose 20 MA, we get 50 MA. Super simple like that. If we make a run back up to the channel high, you're looking at 279s to 280s, depending on how long it takes to get there. I think the pullback in Apple made sense because we hit the channel high, and then we had a subsequent liquidation break. NVIDIA is still pulling back. We're back to the 1010 reference high at 195.62. If that can't hold, we can continue down to the 20 MA at 190.36, and maybe a retest of the breakout again at 183.30 to 184.47, where you might want to start looking to buy the dip. We are technically one time framing to the downside. We might see still further. AMD hit the channel low, a little over that in the after hours at 234.43, and then bounced pretty solidly off the 20 MA in the RTH session. I would say you could use the prior day's low of day now as a stop at 247.39, but anything over that I think is sideways to higher, below sideways to lower. Meta found a bounce today. I ultimately do think this might get down to the 600 to 590.22-ish zone, but we did come down pretty hard, pretty fast. I think what would negate that is if we were able to get back up over and stay up over 200 MA resistance, which had been support, currently 678.84. The neckline is 690.51, so it wouldn't surprise me to see a check back to there, but I think that would be an opportunity for a right or right out short. Snapchat up in the after hours, that usually finds resistance close to the 200 MA, currently 868. I'd probably be booking between there and 923 if we get a rally that sustains tomorrow. Tesla is still looking good. I think a lot of optimism on that robo-taxi. I think it just needs to hold the 20 MA, 443.75, and it does need to clear 470.75. If it does do that, we could retest the 488.54 and maybe make a run to the 500s. Interest rates are rising still, which is not good. We are coming down into the next key support zone between the 200 MA and the 88.44 630 reference high, which was our breakout zone. That is an absolute must hold. If we do keep going down, the end range could be at 86, which is the channel low, and I think that the market will not like seeing interest rates go still higher. Remember, I had predicted we would have bonds rally, meaning interest rates go lower into the Fed, and then it would be a likely sell the news because we had seen that the 2 prior times. Now it is 3 times in a row. Rally into the event, sell the news. As far as Bitcoin goes, we held roughly where we needed to at the 99,090 to 118,000. We bounced. We're playing footsie here with the 200 MA, currently 104,277. I think as long as we're over 103,745, which is of course the 1017 reference low, it's okay. If you're currently long, I think just use the overnight low, 103,090 as a stop. On the upside, we could check back to 107,790 to 110,150. Gold getting a little bit of a bounce, bit of a trend break here, but still below both the 10 and 20 MAs, 368.66 and 375.52 respectively. Bulls will need to get over those and sustain. Next downside support would be the 50 MA, currently 354.76 and rising. If you want to do a 1/2 put ratio, playing for a retest of the 61.8 at 342.67, I like that as long as you get it on cheap or for a net credit. Generally speaking, markets are bouncing. We're checking back to breakdown levels. Breakdown levels need to clear for still higher prices. If they stall, the risk is sideways to lower with liquidation break potential. Like and follow for more.